ekigambo biri ebibiina ebirala by'obufuzi birina ejjoogo ate byajooga nnyo banna Kawempe ne bisukkuluma. Yakola bw'ati NUP yagamba bw'aba ekiseera kituuse eky'okujjuza ekifo ekyalimu omwagalwa waffe Ssegirinya tugende mu Kawempe North tufeffette tulabaani kandidate omulungi asinga kaakano. Ne bayitamu ne bafuna abakandidates 10 ne basunsula ne bagamba bonna balungi naye Nalukoola mu kiseera kino Nalukoola balondamu bali mu Kawempe North. Nalukoola yazaalibwa wali mu Kirokole. Nalukoola asula mu Kalule Zone mu Kawempe wano parish omuluka guno Nalukoola asaalira awo. Bali bannaffe abalala babajjayo mu masoso g'ebyalo tebannayiga kitundu tebannayiga na byakola. Bw'oba memba wa palamenti okola ki tebakimanyi. Oba memba wa palamenti musaana omusajja oba omukazi ow'omutwe omwoki nga Nalukoola NUP gwe yaleeta. Oba memba wa palamenti mpulira bali nga bagamba ngenda kuyoola ebisaaniiko ngenda kugogola emyala neŋŋamba oloba mmeeya bakansalaasi gavumenti ez'ebitundu sinaakola ki? Bannange mbagamba kino NUP yaleeta omusajja Nalukoola nga musajja wa substance nga musajja abimanyi akimanyi bulungi. Memba wa palamenti omulimu gwe kukola mateeka mu palamenti kuteeka ku nninga gavumenti eyawakati bw'eba tekoze buvunaanyizibwa bwayo kukaayanira mugabo gwaffe gwe tulina okufuna. Kale teeberezaamu ekibiina ky'ebyobufuzi kimaze mu buyinza emyaka egigenda okuweraana naye tekisobola na kuteekateeka bye kigenda kuleetera abantu. Bagenda banoonya bayaayaana buyaayaanyi. NUP empya ne baliwe bategekedde ne baleetera abantu abakambwe. Nze ndi musajja mukambwe, nze ndi wattappu, ate nze sityatya. Nze siwa kitiibwa abamenyi b'amateeka nga babeere abajaati. Oli ne bw'aba alina obuswiriri naye ng'alinnyirira eddembe ly'obuntu apaana. Mr. President, nzikiriza nsinziire wano ndabule Genero Museveni eyakaddiwa ne mutabani we Muhoozi n'abo bonna abagoberera ebiragiro byabwe tebentantala ne beepankira akalulu kaffe. Tujja batwalaganya. People power, our power, NUP, everywhere. Muzikirize mbeyanjulire yenze luyimba Zelia Lukoola nga siri muntu wa bulijjo. Yenze NUP gwe yawa kaadi, nze gwe yawa tiketi okujja okwesimbawo okuba memba wa palamenti mu Kawempe North constituency. Akabonero kange umbrella, ate umbrella ye manvuuli. Ekibiina kyange NUP, pulezidenti waakyo ye Kyagulanyi. People power, our power, NUP everywhere. Leka mbabulire ekigambo eky'amagezi. Buli wabangawo okulonda londanga NUP. Bw'olonda NUP oba olonze amazzi amayonjo. Bw'olonda NUP oba olonze amalwaliro nga mulimu abasawo abasasule nga mulimu eddagala. Bw'olonda NUP oba olonze enguudo ennungi. Bw'olonda NUP oba olonze amasomero nga mulimu n'ennoni nga mulimu n'abasomesa abasasule. Bw'olonda NUP oba olwanyisiza obulyake obulabbayi n'obukenuzi. NUP teyagala bubbi, okumanya teyagala bubbi. Ne bwaba owaabe n'afuuka omubbi emutwalaganya. Apepa pawa basobole bannyawo. Okulonda kwanga 13 omwezi guno, nga 13 omwezi guno ku Lwokuna. Obunaku butono nnyo obukoze eki, naye akalulu kano tukeetaaga. Kyokka ng'akalulu kano ka appetizer, kampanji kalinga rehearsals ketwegezaamu olwo nga bwe tulumba kali mukali ak'ettabbu Pulezidenti Kyagulanyi mwagenda okujjira alyoka alumba olulumba olwo tulyoka tukwate Namukadde akubeeza okumakya Genero Museveni tumuze wano ku bbala erwaki tulabwe tuti olwo Pulezidenti Kyagulanyi Ssentamu alyoka atuule Madaraka Ward alyoka akulembera Uganda tulyoke tuzimbe Uganda empya, Uganda etaliimu bajjaati abatulugunya abantu, Uganda etaliimu kuleeta bannamwandu bakyeyonoonere nga batta babba baabwe, Uganda etaliimu kutulugunya bantu. Bannayuganda abalungi mbagamba ekigambo kino, General Museveni ne banna abalinyirira eddembe ly'obuntu ffe tetubatya, ate nammwe mbawaamagezi temubatya. Gye mukoma batya gye bakoma okutujooga. Ntera okuwulira ebigambo mbawe NRM yalidde dda ng'ali atya. Kawempe noozi kirabo kya mmere. Muleke mbabuulire ku bibalo. Mu mwaka gwa 2021 NUP yafuna obululu obusukka 400. Eyaddako yali Sulaiman Kigandala nga yajjanga naye ali independent ng'ate ava mu NUP yafuna 7. Kyokka owaabwe yafuna 6. Leka mbabuuze ekibuuzo eky'amagezi. Kakati mulowooza ku ngeri gye balinyiriddemu eddembe ly'obuntu, ku ngeri gye batubbyemu nga bwe mulabye ne batuuka n'okubba amabaati ag'abanaku b'e Karamoja ne batta n'omuntu waffe. Kozi mugambye ani yatta Ssejjirinya? Mugambye ani? Olabye katono ne bafuuka baganzi. Omwana ataasoma tebamubbira bibuuzo bassebo ne bannyabo. Oyo omukyala talina waaka, bannange Nalukoola alina waaka. NUP everywhere. Mukulu President mukama wange, nzikiriza nkozesa omukisa guno nebazeeyo abantu aba. Mr. President, oyina Secretary General waffe Rubongo y'ono. Bannange musajja mulungi, musajja mukakamu, mutegeevu, akwata bulungi ensonga. Epipa pawa kankongera owokubiri. Waliwo omusajja omuyimbi ayimba yogwe bagamba akwuka ng'ennyonza ate nga tatya. Omusajja oyo ayita mu nfuufu okutuuka ewuwe, n'amaaso ge baŋŋamba gaamyuka olw'enfuufu. Omusajja oyo King Saha, omusajja oyo waddala abaako ku ground. Abantu bangi mekambabulire eno message y'abayimbi abayimbira Kongo Zaire ekimu ku byabasuula kankibabulire kwekukuutiriza kunnakyemalira mu Butu Seseko Wakuku Wazabanga bayagala ebyokulya baddeyo eka ne Namungodi n'ebirala ne beekukuutiriza ku batemu ne bagwa era myuziki wa Kongo yagwa olw'okubanga abaali abasanyusa b'abantu bayagala ebyamangu ne beekukuutiriza n'ababi. Tosobola kwekukuutiriza na mubi n'owangula oba ojja kugwa. Ogamba ani oyo? People power, our power, NUP everywhere. Abasiraamu nina message yammwe ey'enjawulo yenze Luyimbazi Nalukoola nzize ngoberera ebbanga ddene mbadde sekama w'ekibiina ekitaba ba Brida Abasiraamu. Tulabye ebizibu bingi nga balooya Abasiraamu, tulabye bannamwandu bangi Abasiraamu olw'okuba babaabwe babasse olw'okuba Basiraamu. Abamu babasse balina ku mpingu nga Sekirevu. Tulabye okutulugunya kw'Abasiraamu obba busaawo mu ngeri eyeewuunyisa, obba kyetegako agasangosango nga tebasobola na kuleeta bujulizi mu kkooti. Abasiraamu babatulugunya ye ne baba bateebereza buteebereza okuba nti yazizza omusango. Basooka mutulugunya ne bamukolobola n'emisumaali ne bamuliisa goonya ne bamulumisa emisota ne bamwokya paasi. Abasajja
Hey folks, welcome to this special conversation. Now, every year at this time, we are in the SACCO FY earnings season as well and talking about dividends and everything. But this year, one conversation has dominated every household because SACCOs are virtually in every household. And that is the question of exposure to Cusco. And we are privileged now to sit down with the man in charge of the SACCO SASRA, that is the regulatory authority which oversees, the last I checked, about 174 entities. And that is Mr. Peter Njuguna, CEO. Karibu sana.
Thank you.
Thank you for having me to speak to us.
Yeah, thank you. My pleasure.
Peter, let's start from here. You have a vantage point view. What is the scale of exposure that we are talking about in terms of the entities you oversee and regulate with regard to Cusco? And I'm saying that because many of us are not familiar with the architecture, that Cusco is actually not SASRA regulated, but now the entities you regulate have exposure in Cusco.
You're right. Thank you very much. Indeed, we have, an obligation through the institution we regulate. We do regulate actually 350 institutions. 2024, 2025, we had 355. And I think the numbers now, those numbers are the right one to use because from there we have been able to track right from 2021 to see how that situation is unfolding, how much exposure I could ask. I think 2022 we had about 18, actually almost 19 billion placed in the union, which they had a product called Central Finance Fund, which collected deposits. But that has been declining. 2023 came down to about 14 billion. And therefore, we are looking at a figure from the time, we remember our inspection, we never completed, yes, but we had 14.6 billion. Now, I think we've seen the reports because of the work that was done by PwC, who are there now to do forensic, because we realized when we did our work and the commissioner did, there are issues we could not answer, so they had to do deep. Because some of these investments have dated like 10 years, investing and investing. But to answer your question, you're talking about 14 billion exposure, which is about 10% of the capital. And actually that is, you look at 2023 numbers, meaning 2023 would be less, maybe less than 10% of the core capital. Okay. And I say core capital because the capital is a very, very important defense against losses. Mm-hmm. So you're looking like if it's 10%, then we'll wipe out the capital for the SACCO industry by 10%, meaning that because of the prudential regulation, capital, a very key thing, noting that that's the second line of defense. We have the first line as provisioning. And that's why we are pushing for the first line of defense. We are saying, look, provide. So that you also cushion depleting your capital.
Okay.
Yes.
I'll be coming back to provisions, but let me walk you back to something you've touched on, and that is the letter that came from the then CS for Cooperatives, Chelugu, in October 23 to your office.
Absolutely.
Indicating that we would like you to conduct an inspection on Cusco.
Right.
And we had conversations about this at the time. And I'm just wondering to myself, are we dealing with a situation which we could have averted or at least mitigated better than we currently have?
Yes, I would say one, the conversation, the letter you saw was culmination of engagement. Sasasra, we monitor the performance of our SACCOs, and you could see the exposure. And I'll also step back and say, look, the law actually provides that SACCOs can invest in non-government securities. And that means, but that is capped, meaning they can place monies in listed companies, they can place money in Cusco, and other institution, what you call national cooperative institution, but it is capped at 40% of their core capital.
Yeah.
Okay, so to title of it, we could monitor that. And increasingly we realize that they're increasing that. So for 2021, we started engagement, exchange letters. Cusco even at some point told us, look, we have now restructuring our business to separate the financial business so that it can come under regulation. But at the same time, they were saying, remember, the Securities Act does not regulate us as a secondary institution. Yeah. It is designed and framed to regulate primary. So when we realize we're having policy kind of discussions, then it's when we actually wrote to the CS around that, early that year, first quarter of that year, explaining the journey we have worked and the fight we are not fighting, because we wanted to resolve it in a way that, look here, it is for your own interest, you get under regulation. Remember, they had already hived off a risk management fund, which was doing insurance of credit loans and the like.
Yeah.
So they hived off that to an underwriter, insurance company, under IRA. And we told them, look, why don't you now hive off this business? We come. So that was it. But when they refused, then we wrote a letter, said, look, I think policy intervention is required at your level. And that is all culminated now to that letter. And indeed, I would say if the journey we walked, there was, I think, commitment and willingness on the part of the union, we would be talking about a different story today.
Okay.
Yeah.
Let's talk about provisions. When I come through the various annual reports which have come through so far, and largely from the big entities in the SACCO space, it looks like there's variation in terms of how provisions are being made. And I ventured to ask one SACCO, if you look at IFRS 9, it is very clear as to how elevated credit losses should be provided for.
Yeah.
You take the hit up front. And the logic is that you don't want vulnerabilities to manifest further down the credit cycle. There are those who are staggering it over years. There are those who are taking it up front.
Right.
Has there been any guidance from SASRA as to how to go about provisions?
Absolutely, yes. We did give guidance. This circular we gave this year. And I think for us, what we are doing is simply to remind SACCOs that you have an obligation under the law and under the financial reporting standards to actually make impairment reserves for this. And I will say this, when you refer to IFRS, there is a expected credit losses, and which speaks more to the loan, which has a tenor, 1 year. But these are investments, which you had it's like a fixed term deposit, which you expected to be paid on a certain date. So it's true, they have crystallized. The question you're asking yourself, how can I recover something? As that conversation happens, because there is about estimated 5 billion and other assets that have been looked at that can be used to mitigate the losses, then as we do that, you need to make provisions. Now, our guidance, we gave the guidance, but allowed our space, regulatory discretion, where we are able to say, look, SACCO A can absorb, depending on the quantum they had put, they can absorb the losses based on the revenue for the year, because they have to charge this year, or the capital buffer they have. So we give that room because there are different levels based on the scams of the business. And therefore, that's now where you find the variation comes in. Some of them are taking the hit one-off. Others are spreading 2-year, 3-year. And why was this important? SACCOs we call them people's banks. it's you and me who own them.
Yeah.
So these are not sophisticated investors. So there is adverse information, like say, us saying charge once, comply with the IFRS 9. Then we say, look, what would this mean for the, the member depositors in that institutions? It means they will interpret that information in a very extreme way, and that can cause a run in terms of deposit. It will cause the risk to going concern of the institution. So, and secondly, you are talking of a situation that is affecting the entire industry.
So, Peter, you're talking about guidance in terms of provisions, right, and a scenario which affects the entire sector.
Absolutely. So when you realize the impact, it's across the industry, then you can see you can cause an industry crisis that clearly from where we sit and looking at the law, it gives certain discretion to stabilize the industry. And I think that's normal. We've seen even at the regulator, you accommodate that. It came in during the COVID, where we had to give certain regulatory guidance, respecting all the standards to contain the situation. And that's how we looked at it. And therefore, in applying this guidance we've given, that's where the ability of the institution is coming into play. And here is basically to tell the members, look, yes, there is least losses, exposure that your circle has, but it should not affect the member. Yeah? By way of, so provision take off from your income, you may receive a reduction in limit, but that is better. You better suffer that now. Be assured that your deposit will be there, and the circle has the liquidity to actually continue, funding loan book and the like, so that the core business can continue. And then also you also want to protect capital to a certain degree. But some of those who are, and there are also instances we realized that when you impact these investments, some of them were capitalized, say dividend or the return from those investments were being plowed back. There are some who will tell you, yes, we have 200 million, but 40% is interest that we plowed back, reinvested. Now, so that allows conversation with the auditors. Is this a prior year adjustments or is it a knock-off direct? So we left that conversation, and as they come to us, they are very clear. We want to treat this because this is what we are seeing. So that's really the guidance could not be very, very specific. We left that room to discuss by case by case. And I will say that those who have made full provision here is that through earnings. There are some who have gone to their capital. We are okay with it because that's why capital, they say, we will not, because of we have the capital, so you have unpacked, charge what we had accrued over years, prior adjustment, and the capital, we are okay. Because I think we didn't want to cause a crisis after a crisis. So that's really why we are handling it that way.
There are about two or three entities that I've read their annual reports and they've indicated we've written off.
Yeah.
And I wondered, isn't that a write-off coming too soon, considering this is a matter still under investigation? And possibly, is it a statement that the sense is that, especially from a regulator standpoint, that there is no hope for recovery here?
I think 2 points to that. One is the understanding of when you say provisioning. Some, they could have written off everything.
Yeah.
Because a write-off, you need to provide first, then you actually go, because for reserves, you carry them in your book, yes, and you obtain liquidity. Now, when you go write-off, it means you have gotten members' approval. I'm not sure we give you those approval, because write-off of assets has to go to members. Secondly, is the point that, so there is the issue of understanding. But also, if for any reason they get that approval because the amount is insignificant, it means there is an opportunity for writing back. In accounting, financial, there is a way you write back such losses. So I think it's not lost for them. They are saying, we want to forget this, we ever invested here, and we are ready to, so it's okay. But when should anything be recovered, however retro, because those are conversion going on from the assets, and whatever they can recover, then the turnaround strategy, then it can actually be, there are mechanisms to write that back. So it's not that it's lost.
Okay.
Yeah.
And from where you sit, are you optimistic anything could be recovered here?
One, these cooperative institutions are very interesting because they are owned by all these institutions. One thing is that Cusco is very key. And remember, Cusco was founded as an advocacy body. Correct. To do training and lobbying for their members, just like we know other industry bodies do. I think it's venture into financial services business is where we feel it should not have happened. And therefore, as they have the conversation about their core business, this conversation about what can be recovered, I think they can recover something, but not 100%. I don't think that would be possible because you're talking of those billions. And the assets that are being talked about is about 5 point-something billion. So that tells you, I mean, there's no those assets, why would they invest to earn enough to actually earn? So I think something is, but not everything.
I see.
Yeah.
Still on provisions, Peter, I'm wondering where ISPAC comes in all this conversation.
Yeah. I think one, ISPAC, we operate, ISPAC is very clear that Kenya, we adopted international financial reporting standards.
Correct.
And, therefore, when they adopt that, it means the moment IFRS 9 or any other guidance comes in, we have to comply. But remember, there is also that you realize in financial reporting, the responsibility lies in the board.
Yeah.
The auditor comes to give the opinion. But luckily, all these are their members, both of them, the financial preparers and the auditors. So they have a conversation. And I think I've been called by, how should we, the auditors and all, and the ISPAC, and he said, look, I think there cause a decision to be made. We understand the IFRS 9. So if you discuss with your client and they are whatever way, then we are okay to hear. But what we say is, for us to be able to compare like with like, we have a regulatory guidance. So at the minimum, can we have regulatory guidance compliance? If you find you're able to absorb compliance with IFRS 9, so be it. But at the minimum, so that, because again, the modeling for IFRS 9, expected credit losses, probability of default and all that, there's a judgment. A model has a lot of the assumptions you make and all that. And we have seen tendencies where people will make very favorable assumptions. And that's why this providing regulatory guidance becomes important, for you able to make sure that you don't underprovide. And also the reality of the business is considered. But we expect, and we have done this in the past, where we have seen those, because when we took over as a prudential regulator, there are historical legacy issues we had to deal with. We had to also have the same conversation when we clean up the balance sheet over time, or inject capital. And we have seen at the end of the day, a very good understanding from the auditors and the preparers. And I think for us, it's a huge opportunity we have to make sure, look, even building capital is very critical, okay? Because that will have enabled us to just write it off. I mean, provide one-off, then now you wait for the recovery. But we're in a situation where, as an industry now, those years, we realize that the change in the business model has not been as fast as we would have wanted. Why? Because unlike other institutions where they can hire experts in the board through independent directors, here is a situation where you have directors changing through election over time. So you realize that affects the momentum, the speed of the changes that you'd want in the business strategy. And therefore, but where we have had consistency, people we licensed 5 years ago, or 2010, 11, and they dealt with these legacy issues, you'd find some of them had very little, if any, investments in that. But those things have been okay. They're also bullish because the quantum of investments was also a function of, one, the size of the institution, the free floating cash after lending to members. So they were also taking bigger risks to investing more money. Yeah. But I also hasten to add this, Julian, that this investment, like I said, are across. Our analysis is that over the last, and I think it's in our circumstantial report, that pushing the buttons has helped also what you call government securities change. I think we saw a huge shift the last 2 years in government securities and reduction. Like 22, we started pushing down. I think the market was also now sensing. Yeah. We started winding down in Cusco. That was evident. And it was not good for us because it was assumed it is us who are discouraging these circles from investing there. Yet we were asking questions, not telling them, yes, where are you putting your money? And so out of that, some of them made decisions that in the boardroom, we'll only invest in regulated entities. If it's not regulated entities, we'll put this retro as from, affiliation or just providing support to an institution that is in the cooperative sector. It's, I think, the scale of change that was a little slow. And like you said earlier, it would have been better if the changes we were pushing from a regulatory perspective were taken earlier.
On that point of risk appetite, Peter, I've always wondered, because if you look at the capital market side, for instance, the pension benefits, there are very clear ceilings prescribed by RBA in terms of how much risk you can take on in certain asset classes, which tend to be very volatile, private equity, real estate, etc. Do you think that, one, we seem to have had a failure on that part in the SACCO space, and is it an opportunity to revisit that conversation on tightening?
One, I'll confirm that we also have limits. Actually, we have limits on how much you can put in non-earning assets, say buildings, equipment, and the like, and properties. And we do have limits on non-government investments. When you invest in government securities, no limit, so long as your members are not complaining. But we have limit now. When you put listed companies investment, like where they were putting, there's a limit. It's at 40% of the core capital. So it was there now, and therefore that gives the board's space to actually conduct due diligence. We shall put in this entity, we shall put this entity. Now that is what we expected them to do. But now the lesson we are learning is, look, I think we left a space where they also went too far, given what we have seen. Because we see the last 23 we have seen, and 24, we have now seen a shift in a lot of regulated investments, asset management firms, government securities. It's a good thing. And therefore, we may, from where we sit, and also 2020 regulations, we became very prescriptive in non-government financial investments. In fact, for them, they have to take to members, get approval, and we have to approve before it's getting to members. So we're also learning. Here, the difference was, these were term deposits.
Yeah.
And these entities will tell you, we used to place money, and every year around Q1, when we are paying our dividends and interest on rebate, we'd get back our money. And we have done that for the last 10 years. So what went wrong? So like any business, I think that's now what the forensic audit has given indications, how things went bad. And, that's really where the conversation will be there. How do we learn from here? But clearly from our side, there are lessons. One, mixing advocacy and financial business is a no. And like I told you, we did our policy proposals back then.
Yeah.
Luckily, it is already with our minister, and we know he has, I've heard him say that it's on its way to the cabinet, so that any entity taking secondary SACCO, because like there has been debate, does the SACCO Societies Act apply on secondary SACCOs? That is a SACCO whose membership is actually legal persons, not the primary SACCOs. There has been that gray area, like you observed. And that, I think, is one we are sealing. Nobody will collect money without that. So I think there are lessons certainly to pick, but the ceilings have been there. Only that in the exercise, that's like you said, other sectors, the board all are left, the governance board are left the latitude. How do you place your money? Now, there is this regulatory ceilings, but your risk appetite will take you, I can put more here, I can put that. I think that was not, properly, implemented.
Okay.
Yeah.
Peter, don't you think, and I think you and I have had this conversation in the past, the fact that we have the Cooperative Societies Act, and then we have the SACCO Societies Regulatory Act running parallel, then creates a perverse outcome, in the sense that we are now in a situation where an entity like Cusco, secondary player, has been exposing primary players under your watch. Don't you think it's time we had a conversation about consolidating these two frameworks?
I would say yes and no. Yes, because the SACCO business is financial deposit-taking business.
Yeah.
So certainly there need to be clarity. But also, Cooperative Societies Act is an incorporation act, first and foremost. Just like we have Companies Act, which incorporates those kind of business in financial space. Then they go for the business regulation to the relevant statutes. And I think that's where we are mixing the two, that cooperative society has to define the incorporation and the governance, AGM, how they are run. That's their space. Whether a SACCO should have delegate or membership, that's their space. Now, when it comes to the conduct of this business, SACCO business, then things should be squarey. That's where the clarity is required. And I think there is no debate about that. It's been very clear, because I think what the Cooperative Societies, the bill in Parliament 2024 is already gone through the National Assembly. It's actually going to the Senate now. It's actually in the Senate, and it gives clarity that this, kind of commingling of businesses, because members, have asked. And it's unfortunate, I must say, because even when SACCOs started, then members would push the limit, they would take more business, even, without careful analysis of the risks. And remember, the regulation, even SASRA Act, came much, much after FOSA business had grown. So I think we are finding ourselves that we left this space of secondary, where now this commingling, financial advocacy, it creates certain very serious conflict. now, and I think that's where now the Corporate Societies Act and the SACCO Society, there is consensus. Secondary SACCOs they have a place in the SACCO ecosystem, but it has to be regulated. And I think the law recognizes that. But also there needs to be clarity. And I think that's now where regulating Corporate Societies Act may not define the whole spectrum of risks, because it's a small SACCO registered today or a corporate registered today, whether it's a dairy, artisan mines and all that, I think it will still have a big role to play. I think the issue is it has recognized that now we've been having 4 3-tier system. We have the unions, then we have the apex. I think it has now 4 tiers. Primary, then you go to secondary, which can do wholesale business with their members, but they have to be regulated. Then you have a federation, which will do advocacy and training and the like. I think that bill also is a piece that has taken a bit of time. I think for the last 10 years, been conversations, and I think this underscores that when policy reforms start, they should be fast-tracked, because we are looking at a situation where, like you write, if some of these policy reforms were concluded, I think we'd be having a different story. Cusco would have separated maybe the last 3 years their business. So I think it's a push for us that when policy reforms start, by the time you are doing policy reforms, you have seen a policy gap.
Yeah.
So, and you have seen, if you're not still, there's going to be a problem. So I think that for us, as from, as regulators, policymakers, is can we fast track it? And I think that's where the challenge is for us. At times, the reforms in the cooperative sector take ages to go through.
Okay.
Yeah.
I've got 2 final questions and we dial down our conversation. One, there are SACCOs have analyzed their annual reports and I've looked at the scale of impairment charge they're taking in light of Cusco. Yeah. And it's really outsized. And I've wondered to myself, could some, and being the regulator, I'd imagine you have a view of this, could some be taking advantage of the situation to clean up the house, if I could call it, tidy up your balance sheet and ensure that you're tidying, then the numbers could be more than Cusco, in my thinking, for a few players?
You're right, and it's a wake-up call. I would say it's a wake-up call. I think we've seen Cusco what has happened, looking at the numbers, the investment, because there is remember, nearly 80% of the assets of SACCOs are held in loans to members.
Yeah. That's
an area we keep very, very close, because we know, again, we have seen challenges in how the loan books are kept. That we keep a very close eye. But also, the law is very clear that the board has a responsibility to actually have a very clear asset review system through which they're able to classify the quality of our assets and make provisions. I think this could be, one of what you are saying, that, and even for us, we have asked ourselves, what else didn't we see? And I think for me, it's an opportunity we have that there are a lot of reforms we'll bring, including today, Julian, you realize that the books of accounts, like the case now we have seen of the union, who signs the books? We realize it's a chairman, treasurer, and possibly one the director. Now, in the complexity that we are seeing in the SACCO businesses, we have to ask ourselves, do these people, say for those institutions who are lucky to have, CPAs in their boards, if you are not a CPA, what are you signing? You take responsibility. And I think we have now seen 2 or 3 cases that now call to action. And that's a conversation that we need from a legal and even a financial reporting from ISPAC, that this has to change, because the finance director, the CFOs have to take responsibility. The CEOs have to take responsibility first and foremost, because even if you say the board are the preparers and they don't append their signature, they could throw the board under the bus and we find ourselves. So I think it's a wake-up call, and therefore what you're observing possibly, I think we believe is a situation where, because as we said this, and also we are also employing SACCOs, look, please come out clean if you have any, because at times, remember, we don't manage these institutions. Yeah. They are both CEO and qualified CPAs. If there is any, problem with your SACCO, you better let's clean it up. Yeah.
Okay. Final question. For many Kenyans, their first interaction with formal financial inclusion was through SACCOs.
Right.
That's how they were raised. That's how they were taken to school. That's how they built houses, etc. And many who might be watching this are wondering, where do we go from here? There have been concerns that we could see what looks like a panic in the SACCO sector, etc. In your own view, where do we go from here?
Shukran, thank you very much. I want to assure members that one, Cusco was a corporate SACCO, so to say, and it is their SACCOs that had invested there. One, the investments, like, were on average, the industry average is about 10% of the core capital, meaning their deposits are safe. So therefore, no cause for alarm. Don't panic to go withdraw your money, because that panicking, you will actually create a crisis. Because if 10, 20 of us go looking for money for an emerging crisis, then you cause liquidity crunch. So I would say, members, yes, hold your directors to account. Ask the tough question, but we want to assure you that from a technical point of view, making provisions, you are actually protecting the deposit. Okay, you are telling, look here, we have a problem, yes, but we are not sure how it will unfold finally. So we are preserving part of the income we make this year, and you do that. That means the deposits are safe. Okay, now, and over the years, the prudential regulatory framework, one of the key things we have encouraged is provisioning for impaired assets and building capital. Provision, we say, is the first line of defense against risk to assets. Capital is a second. So look at your SACCO, and then to say that that is working, you actually look at the liquidity. Is this SACCO having liquidity? And some of the SACCOs, those ones taking a hit, you'll realize they have 20% and above in terms of liquidity. They have invested in government securities and all that, meaning they have liquidity reserve to cushion the risk against, going to the cascading to the members. So I want to assure members of the public that from the analysis we have done, we had 201 SACCOs that had invested in Cusco out of the 355 you're talking about. Meaning there is, that, therefore, and the number in totality of it from the total assets, the total asset for the industry, that's about barely 2%. So you're saying there's a problem. It's a serious problem, yes, especially when you look at it from a governance perspective.
Yeah.
Because you are asking yourself, how comes you do not see this? You're just putting money over and over. And I think the report for forensic has a lot for us to digest and see how we reform. But from individual member, a depositor perspective, I would say there's no need for panic. We need to see change. We need to hold boards to account, because members, they are the owners of the SACCOs. They are the first regulator.
Yeah.
If you don't hold your boards to account, then they will just be happy and continue doing the same old thing. You hold them to account, then they know tomorrow we got to be more diligent in what we do, because I think some of the exposure you have seen is outsized.
Yeah.
And therefore, from an individual perspective, I think there is no cause for alarm, no need to panic. And we have taken that in the regulatory guidance we are giving, and the CS has spoken about it. We are very careful, because it doesn't make sense for you to just provide and then you are insolvent the following day, and then you tell your members you can't pay you return on your deposits. And mind you, the deposit, like if they are grown, you'll find a member who has saved for the last 20 years. He looks at that, January, I'll sort my couple. So I think we didn't want to cause that panic, and that's why we were very considerate, very prudent in how we manage that. And I think that takes care of the interests of the members who are depositing in SACCOs, and therefore they need not panic at all.
All right.
Thank you.
Mr. Peter Njuguna, thanks so much for your time.
My pleasure.
We have been having a conversation with the CEO of SASRA, the oversight body on SACCOs, and we have been touching on the subject of the exposure to Cusco. Remember, no one has broken down this issue like we have. Stay tuned for all the breakdown on any emerging issues.
All right, thanks, Julian Samboko, for that conversation.
Your trader-centric, innovative approach has introduced another game changer, and that is the Ola Prime Instant Account.
Oh yes, that's right. With the Instant Account, traders who are experienced or talented don't have to go through an evaluation phase. There are no profit targets, no minimum trading days, just access to the Ola Prime account. And make profits consistently and start getting rewards and splits immediately.
Our next conversation is about, financial management and where you put in your savings. So many people actually put in their savings through SACCOs. Mm-hmm. Savings and credit cooperative, because SACCO will give you money based on the amount of money that you've put in, and also because you are a community of people who are members of that SACCO, you co-guarantee one another. Now then the SACCOs put money in their own SACCO, but they also co-guarantee one another.
Yep.
It's called Cusco.
Yep.
Kumbe kimeumana huko Cusco. We Now, our next guest is going to help us unravel and understand these things, and then also understand the legal safeguards for the money that you have put in a SACCO. He is Ken Gishinga. He's an economist. Ken, good morning.
Good morning.
How are you?
I'm very well. Happy 1 month anniversary.
Asante sana.
You're a fixer. If you know it's a 1 month anniversary, you're a fixer for sure.
And he listens keenly.
That's it.
Oh,
He's a keen listener. Karibu sana.
Thank you so
Karibu
much.
sana. Our good girl Jano is offset for a bit. She'll be joining us in the conversation as we continue. She's handling 1-2-1-2. Say
Vitu moja mbili.
moja mbili like this.
Absolutely.
Yeah.
That's life.
But you're here, Ken, so that you can also help us just understand what's going on. The issue, the conversation around Cusco has been there for a number of years. And there was investigation that was commenced by the Ministry of Cooperatives and MSMEs. And there was then what we saw, arrests and arraignment in court of the top officials and some board members of Cusco. And then there was now the revelation of the impact that is having on individual SACCOs, when the SACCOs now started releasing their financial figures. And we are saying the kind of hit and how they are cushioning those hits. So you will let us understand, is our money safe in the SACCOs? But before we get there, let us see what the Cabinet Secretary for Cooperatives and MSMEs, Wycliffe Oparanya, had said when he talked about the investigations and how far they'd gone and the fate of the money that was lost.
We have already made the members of Cusco, and we have already pointed to them that they are unlikely to recover this money. And even if a recovery process is undertaken, it will take too long. So we have told them that in terms of accounting prudency, they make appropriate provision in the accounts, and we have given them, because some of them they were owed billions. So we have said, instead of making a provision in 1 year, they spread it over a period of time.
You saw, and I'm sure even that time when CS Oparanya spoke, you saw what he said. And he's saying we've been doing investigations, we've unearthed that there was a lot of stuff that was going on at Cusco. And, the possibility of recovering all this money, it doesn't seem like, we'll be able to recover all this money at the same time. Let's start from the very beginning. What is Cusco? And what's the relationship between Cusco, individual SACCOs, and the regulator?
Many thanks again for having me, Eric and Mariam. Indeed, this is a very bizarre development, and I think it's good to unpack the architecture of this situation. Many Kenyans are members of SACCOs. It's closer to people than the banking sector. Your next door neighbor is likely to be within a SACCO, much more likely than in a bank. So this is something that touches ordinary Monanchi. And there are typically two types of SACCOs. You have the deposit taking and the non-deposit taking. You'll find more people in the deposit taking SACCOs. So you remit your monthly deposits into the SACCO, and typically within a few months you're eligible to get a facility.
Right.
And that's the phase that most Kenyans are familiar with. That's your everyday phase. If that process works well, that SACCO will make a profit. It'll take Mariam's deposit and make a loan for Latif and make a profit. Typically, these profits then can be reinvested. And now these SACCOs have their union where they can put some of these deposits and profits into those unions. Now that's two layers detached. So most Kenyans are not familiar with that secondary layer where the profits and deposits are stored. And that's where the mismanagement has been happening. Quite bizarre withdrawals have been happening. I don't know how it's possible for billions to be withdrawn and really with very little explanation.
Right.
And I think that's what Kenyans are waking up to. A layer that is beyond their everyday layer of their ordinary SACCOs. And they were asking how much has our SACCOs lost? Obviously, each SACCOs has deposited different amounts. So the exposure is a bit different. Some will take a bigger hit than others. What the minister said in that clip you played, Eric, was in the end, nobody will lose money. But that's a very sort of very reassuring statement, and that's
in
why
the end nobody will lose money.
Right.
Okay.
Can 101, you start your first ka job,
Yes.
and it's like, join a sacco, join a sacco. If you know
Right.
what's good for you, join a sacco.
sacco.
Safest place to put your money. And then fast forward a few years, you see Cusco. You're like, okay, I don't know what Cusco is necessarily,
Right.
but it sounds dangerous. So from a individual saver perspective, I know there's a lot of tension. People are worried. Did my sacco have its money in Cusco? Does that expose me to any risk? And can people, no. But it doesn't, help to calm people down unless there's a surety that they will not lose money. So how will people not lose money? What are the safeguards? Are they real, actually? That's the question. Or are we just hoping that people don't lose money?
That's a great question, Mariam. And that surety you're asking for is really anchored in the law and the regulations. There are a couple of laws that govern the SACCO industry. Number one, you have the SACCO, the SASRA, the one that establishes SASRA. It's called the SACCO's Act of 2008, the one that establishes SASRA, who is the regulator. This is the CBK for SACCOs. Then you have a couple
What is
of
SASRA in full?
SASRA is the regulator. It stands for SACCO Society for it's a long phrase.
Regulatory
Savings and something
Basically,
regulatory
it's
authority.
what
yes?
CBK does for banks is what SASRA does
for SACCOs.
Exactly. It's the
Yeah.
policeman that cracks the whip if you don't meet certain targets. Again, as I said, there are two types of SACCOs. You have the credit, the deposit-taking SACCOs, the majority. Then you have the non-deposit-taking SACCOs. You can't withdraw those deposits. So those are two different entities, two different business models. The first one operates almost like banks. You can have your deposits, you can have your loans, you can have facilities. The second one really are more credit lending, credit facilities, and you can't really withdraw. So there are two legislations that govern that. There are a couple of other peripheral legislations, such as the Finance Act 2021 that introduced excise taxes, but those are sort of on the periphery. So SASRA really is the authority.
Body. Okay.
There are about 5,000, about 4,000 of these SACCOs. The deposit taking about 300. So the mandate for SASRA is actually far bigger than CBK. CBK has to play with about 30, 40 banks. SASRA has to deal with about 4,000. So obviously capacity again is another issue. Do they have the requisite capacity? So in terms of those safeguards, those are the safeguards that are supposed to help SASRA help these entities determine the liquidity concerns so that you're never out of money. Because as I said, your deposits have been lent to somebody else. So there has to be something that's left in the reserves in the event that people want to withdraw, they can be able to withdraw. That's it's called the fractional reserve banking approach. So SASRA is meant to look at that. But again, capacity becomes an issue. As I said, you're looking at a much larger ambit, much larger than CBK. And the capacity, again, in most of these SACCOs is quite light in terms of governance, in terms of, it depends. You have the big ones that really run super professionally. And of course, you have the small ones. And it's good to say that the top 50 of them control about 3/4 of the industry. So if you really get the top 50 right, you've really...
Then you're shaping the industry.
You're shaping the industry. So in a sense, it shouldn't be as difficult as it is. If you get the top 50 right, you've secured about 75% of the industry. Now, I think capacity has been an issue because we're talking of illegal withdrawals. So it's, it sounds odd, that 6 billion.
What do you mean by capacity, though, Ken?
Well, as I said...
Whose capacity? Capacity of SASRA?
First, the SACCOs amongst themselves, but more importantly, SASRA, in terms of being able to make sure the sector is liquid, make sure the sector is viable. Now, one of the challenges that has come up is the issue of provisioning. Anytime you make a loan and that loan does not come good, you have to make a provision for it. And the knee-jerk requirement in this type of crisis is that different SACCOs should make provisions for any bad loans that have been made. The problem when you do that, you can create a liquidity crisis because banks, SACCOs can end up using all their money
for provisioning.
For provisioning, and they don't have anything for their members. So I think in the spirit of the wisdom, they've said, let's try and stagger these things over the next few years, which I think is wisdom.
Okay.
You have to apply that. Otherwise, you can, sometimes when you apply these things to the letter, what they call IFRS 9, you can really get into situations where you have a liquidity crunch and even a run on a SACCO where everybody says, oh, wow, my SACCO is in problems, let me go and take out, which we've also seen in the banking sector. So I think there's a level of prudence. It's almost similar to what happened during COVID, where there was a crisis and you have to manage the industry, make sure nobody loses money, make sure liquidity, confidence is still there.
Right.
And I think that's where those arrests had to be very public to give people that sense of confidence. But definitely we are not, the industry is not where it needs to be in terms of really being world-class, if you like,
A couple
being
of
ready to
questions,
be a
though.
bank.
Right.
Stepping back, right? So we know that SACCO is a savings and credit cooperative, which is member-driven. We join together, we form a
Right.
form
Make a SACCO.
Make a SACCO, right?
3,
So
4.
we put in money, and then from that pool, we are then able to take facilities out of it. And then the SACCO starts making money. That's those things. It's regulated by SASRA, which is a legal entity, which is taxpayer funded to regulate. Who's Cusco?
So Cusco is a union, is not a regulator. So once SASRA is a regulator.
Right. What is a union? Is it a SACCO?
I would say it's more of
A SACCO of SACCOs.
a SACCO of SACCOs. That's it. So it's almost the way you have in the insurance industry, you have the reinsurance sector versus the regulator IRA. So this is the SACCOs. Actually, that's the best definition. The SACCOs of SACCOs, because they need to pull money somewhere. Because remember, also the members want returns, and as an individual SACCO, you might not have the muscle maybe to pull off a real estate investment. But if you pull it together with other big SACCOs, you can be able to build a plaza, for example, buy a bigger asset. So that is the wisdom behind the SACCO.
So SACCOs put money in Cusco.
Correct.
And then what does Cusco do with that money?
They invest it. They invest it in various assets. They try to make returns for their members.
Can SACCOs borrow from Cusco?
They can't borrow from SACCO, but they also do have capital reserves sitting with the regulator, sitting with SASRA. And that should be their first line. If you're in a problem, the capital reserves should be your first line. But they
Same
can
way
access.
banks have with the CBK.
Absolutely.
Okay.
But they can definitely be able to. They are a corporate entity. The way you're an individual member and you have your rights, there are corporate members and they do have their rights in terms of maybe if their members require more liquidity, they can be able to borrow.
You know, I'm asking these ones, just so granularly, so that we know how our SACCOs operate, right? So we are members of a SACCO, and we know we are trustees, and we know we elect those people who get into the trustee board, and those are the ones who report to us. Right? Every year they call an AGM, and all of us as members of a SACCO go for that AGM and we listen. How has this SACCO performed? Where is the money? Are we getting a dividend? Are we able to withdraw? All those kind of things. So if then SACCOs create a SACCO called Cusco, are those SACCOs doing the same with Cusco? Are they the ones who choose the leadership of Cusco? Are they called by Cusco for an AGM? Do they look at the statements of accounts for Cusco? Do they then see the health or unhealth status of Cusco?
Depending on their deposits, quote unquote, their shares, because the deposits really become your shareholding into Cusco, that becomes a shareholding of Cusco. So obviously you'll have the bigger SACCOs having a bigger say, in the sense that they have a bigger shareholding. So absolutely, they do operate like that. And what's the wisdom behind this? As I said, these smaller SACCOs have capacity issues. They don't have the best investment minds. They are membership driven, ordinary Mwananchi members. So they may not have your CFA, your banker, who has insights on stocks and bonds. But if they pool their resources together, they can be able to at least get an expert to tell them, put some of this in real estate, put some of this. So it's not just pulling money, but it's also the collective wisdom of where money should go. That's the ideal. It's very similar to retirement benefit schemes.
Right.
You'll find every entity has a retirement benefit scheme, a pension fund, but you'll find they put that money with a fund manager somewhere else, and that fund manager is the one who has all the expertise to be able. So you'll find at the SACCO level, it's more of administrative, but really in terms of the strategy, should we put our money in stocks versus bonds? It might not be at that level, and that's why you need to pull your resources. That has been the wisdom behind that. Yeah.
I think I have two questions, but I think maybe we can get through one before the break, and they're all to do with member exposure. You said it very clearly, so at an individual point shouldn't be an issue, but then there was like a red flag I had, which is sometimes we're not as stringent with the rules. So if SACCOs don't have enough, I think fractional revenue, could there be exposure on individual members' parts?
Well, each entity will definitely have a haircut because they're talking about a significant amount of money has been unaccounted for. And obviously the bigger institutions will have a bigger exposure. That said, each of these SACCOs also has within them a framework to make sure, even as they lend money to the union, they amongst themselves have enough to meet the liquidity needs for the members. So you might not feel it on the outright part in terms of you going and not getting your money back. I don't think you'll feel that. But in terms of maybe the returns you'll start getting
when it's time for dividends now.
Dividends time, I think that's when you'll be like, oh wow, I was expecting more, but this is much less. So it'll be felt a bit later down the cycle than now, which is not a bad problem to have, because the big crisis right now is when if people can't access. That fund has been there for particular reasons. What is emerging is perhaps people do not have the visibility on all the outcomes that would have come. And I think that's what's triggering the confusion in that particular sector. I think it was a good concept, because you'll find most of these entities, most Kenyans use SACCOs for about three things: real estate, agriculture, and probably trading. You'll find most Kenyans and fees, emergency things. You'll find most people, but on the business side, it has to be in those three areas: either a real estate venture, farming, agriculture venture, or trading. Maybe you want to buy wares and to sell. So you'll find most of this funding tends to be structured, such as with the housing fund, to look at real estate. So it is an aspirational thing, but it definitely needs to be thought through in terms of the various clauses guiding it.
Yeah. And I think we'll come back to maybe a little more of the exposure, but the red flags and green flags when it comes to SACCOs, even unions of SACCOs. But there's also some feedback on YouTube regarding our conversation, as well as on TikTok. And of course, we want, of course, more information about the fraud. That's what people are asking about, and we'll definitely get into a little bit more of what exactly happened at Cusco as we figure out what are the red flags, green flags when it comes to operating a SACCO, joining a SACCO, when it's time to leave a SACCO, if there ever is a time.
I mean, we are hosting Ken Geshenga, who's an economist, and we're talking about SACCO. Right? Is your money safe in a SACCO? What do you look out for? First, it's important to understand that whole structure, because many times you just think about, okay, so we have to come together and we've called ourselves what? Fixer SACCO. So we all put in money, and then, by the way, Mariam alichukua 3 million juzi na amelipa. So pia nani achukue. And we don't know, so how do we manage this SACCO? How do we govern this SACCO? Does this SACCO report to anybody or anyone? Beyond what we know, should this SACCO be licensed? Should it not? And that's where the regulation and the licensure comes in. And the questions also coming in, like Sakina is asking, if KBA is able to have oversight on banks, where was Sastra and why was it unable to have a proper oversight on Cusco? Yusuf is also asking questions on this. Questions on the recent fraud. Have you investigated about fraud and knowing exactly what questions should we be asking ourselves in this? This is a conversation that continues shortly. It's 7:30 at Fixing the Nation, one conversation at a time. How safe is your money in SACCO? Ken Gishinga is still with us here in the studio. He is an economist and is educating us on safety and what to look out for when it comes to SACCOs. Let's understand the global structure of the Savings and Credit Society. It is regulated, okay? Number one. Number one, there is a law that regulates SACCOs. It's called what? The SACCOs Act of
2008.
2008. It creates a regulator called the SACCO SACCO Societies Regulatory Authority,
yes.
SASRA. That regulator is the one that licenses all SACCOs, deposit-taking SACCOs or non-deposit-taking SACCOs. Not all SACCOs can take your money as deposits.
Yeah.
So the ones that are non-deposit-taking, what do?
Well, they issue credit facilities, but the deposits cannot be withdrawn. So you can put in your money, but you cannot withdraw it like in a normal.
To regulate, supervise, and develop the SACCO industry through promotion, we act with honesty and promote a culture of trust in the conduct of our business. Those are the core values of SASRA. SASRA regulates all of them. Cusco is a union of SACCOs. It's a SACCO of SACCOs.
Right.
Whereas now SACCOs decide to put money into Cusco. And then Cusco goes and invests that money and brings in the returns and distributes to the SACCOs according to how much they're put in.
Correct.
And then that money from that, when it comes to SACCOs, it then goes and it's taken to the members of the SACCO for their benefit. They can decide we are declaring a dividend, or an AGM can even decide no dividend this year, let's grow our, right?
Correct.
Okay. Sawa. So when money goes from my SACCO to Cusco, who decides that my money will go to Cusco?
It would be the administrators of your SACCO who make, first of all, a determination of the performance, the profit made, and how much is available to be reinvested with the Cusco.
Okay.
Yeah.
And those are the administrators, those are the officials also that we have elected.
Correct.
And those that we have employed.
Correct.
To work in the SACCO.
Correct.
So they are experts on these financial matters.
I would not say they are experts on matters financial. They tend to be more administrators.
Okay.
And they tend to be people who make sure that the administrative processes are followed. In one of the questions that you read from one of your listeners, they talked about KBA. Why can't they be like KBA? And it's interesting. That was an interesting question because KBA is a lobby for bankers. CBK is a regulator.
It's a regulator. So
CBK is a referee. KBA is the coach, if you have to use footballing terms.
Yeah.
Okay.
And that's the same relationship these SACCO societies work. Where SASRA is the referee, but Cusco is almost like the coach. It's on your side.
Cusco is just, it's a club.
Correct.
That you put in money. I'm heading to somewhere with this question, which is when my SACCO has put money in to Cusco, who ensures financial probity?
Indeed, it is the administrators of your SACCO who should have full oversight into all the activities Cusco. And Cusco has mandatory reporting that is supposed to provide the SACCO members, the leadership, the administrators of your SACCO. So they need to go through the reportings. If you look at the charges that the DCI have preferred against the Cusco leadership, one of them is conspiracy to defraud, presenting false documents. So there is a possibility that even the SACCO leaders could have been misled by false documents.
Okay.
For example, somebody at Cusco issues a fake invoice. It's very hard for somebody at the SACCO level to say this was a genuine invoice. So there are also limitations that also, and these are the things that are being proposed to be strengthened, especially when big payments have to be made. What are the processes to be followed? So there are gaps, definitely.
But how do we close them? And I think it's a good place to pick up from. I've seen two questions here. One around auditing. That's Professor, who asks, Cusco was being audited for the past 10 years, I think probably since its inception, right? And including by the regulator. Cusco had professionals certified by ISPAC. You need professionals to execute this. So how did all this slip through the cracks? Again, might be hard for a SACCO official to be able to see those things, but an auditor should be able to see some of these gaps, no?
We've seen cases in the past where even auditors have been blindsided. If you think of Mumias, Mumias had a clean bill of health from its auditor when we knew things were not going very well. KQ had a clean bill of Health from its auditors, and those matters were raised up much later. So even auditors, they can issue queries, but it's not foolproof. And that's why these processes need to be constantly reevaluated. It's not something you create a legislation 15 years ago and expect it to work in 2025.
Right.
We have cyber crimes that have come up over the last few years. You have much more intelligent defrauding techniques. So one of the things that SASRA should do is frequent review of policies. You know, there's some old regulations that govern SACCOs, also like the Cooperatives Act, which is much older, much weaker, you know. And that explains why you'll find some SACCOs are not regulated by SASRA. I know that was one of the questions one of your listeners was asking.
Let me actually just pose it to you so that Alex feels heard. If the SACCO isn't SASRA regulated, is it safe? I saw the list of regulated SACCOs of 2025, and the SACCO where I'm a member and it's a deposit-taking SACCO wasn't part of the list. How safe is my money? So one, maybe, how do SACCOs exist without being regulated by SASRA? And then how safe is Alex's money?
That's an incredible question, Mariam. And I think we should go back to the history of cooperative movement. Kenya has one of the largest cooperative movements. And some of these cooperatives, some of these SACCOs are from very humble backgrounds, deep in the rural parts of Kenya, where people have sat down around a table and they have pooled resources, and they've been able to educate children, they've been able to pay medical bills, they've been able to buy property. So it's such a deep part of the Kenyan psyche. It's almost part of the Harambee philosophy that's in there. So some of these cultures almost predate even some of this legislation. So you might find some of these have these very humble origins where many things are not even documented, people are not experts, but they worked still. And you'll find some of them have these legacy histories that have been there, and they've been there for a long time. And the fact that they have worked meant they gave people confidence that they can still work, even without these regulatory powers. But obviously, we're in a new age. We're in an age with new risks. Investment risks are quite huge. Credit risks are quite huge. So the mums and paps approach that could have worked 20, 30, 40 years ago, when the objectives were very simple. Let's pull in together, let's buy a shamba. Now have become much more sophisticated. You are now banking, you're taking deposits from this Gen Z who has far deeper aspirations. So the complexities have increased, and that's why SASRA was formed. You know, SASRA was formed in 2008. That's very recent, if you think about it, compared to how long
the cooperatives
have been. So it tells you it's still for an industry that's been well since independence, really, and a regulator that is less than 15 years, there's a lot of work. So I'm not surprised that not all these have entered, but I think SASRA's mandate at some point is to come up with a cutoff date and say times have changed. It's important now everybody plays with the same rules, has the same safeguards.
Okay.
Yeah.
Does the law allow anybody to hold money for other people if you're not regulated or licensed?
It doesn't.
So they're operating illegally.
So you cannot be you cannot call yourself a SACCO if you're not licensed by SASRA.
So at the
long and short of it.
Okay, so at the banking level, absolutely, you cannot call yourself a bank
if you're not regulated by Central Bank of Kenya,
and you cannot be a deposit taking. At the SACCO level, as I said, we have some of these entities that predate legislation that have been operating, and I think possibly even out of political reasons, they could not just be done away with,
and they have to be regulated.
They have to be, and this is a push. They have to be now to be regulated. I think you see, the IMF and the World Bank gave some recommendations to Kenya about a couple of decades ago. It said it's important also some of these SACCOs eventually become banks.
That's how you grow.
Exactly, and I thought that was a very profound wisdom, because it's an aspirational sense. You can have good management, tell your members, if we practice good management, one day we can be a fully fledged commercial bank.
Okay, so one of the things that you expect out of SASRA when it was formed is look at those old ones,
right,
and go and show them how to join
The new
formal
age, yeah.
licensed SACCOs, right? Or just become licensed. You can go to sasra.go.ke, and under that you'll find publications. If you just click under publications, you'll see the licensed and the licensed SACCOs. Licensed deposit taking SACCOs, like now there's this list of licensed and authorized SACCO societies in Kenya for the financial year ending 31st December 2025, and they publish them every year. This was published in January 27th this year. Last year, they published the ones for license for 2024, license for 2023, and so on and so forth if you go down. So if you'd like to know whether your SACCO is licensed, you can just go and find it on the list under sasra.go.ke. You talked about capacity. But sometimes this capacity story is an excuse for very many things, Ken, right? So for instance, if there's one entity called Cusco. Well, I know there are several others. It's not just Cusco that is a union of cooperatives. But if there's an entity called Cusco where SACCOs are putting in money, SASRA should have visibility into that. SASRA should know that then Cusco, you're supposed to report. This is how you're supposed to report. You're supposed to send us your reports. Let's also look at how well you're doing financially, how your systems are operating. They should have seen the red flags as a regulator. Again, the leadership of SACCOs should have seen the red flags as the people who have put money into these SACCOs. Again, we have a commissioner for cooperatives who should have seen the red flags. How did these red flags just become green to all these entities?
I think also the reporting of this scandal can be oversimplified. Okay. And especially when they use the word illegal withdrawals. You know, it gives the ordinary Kenyan the perception that somebody went to the account, removed money and put it
in a bag.
Yeah. So and it obviously now begs the question: how is that? How does that even work?
Right.
But if you look at the DCI charges that have been presented, it presents a more cunning approach to our fraud. It's people presenting false documents. I mean, even today, the national government is struggling with pending bills. And one of the things, they even set up a verification committee. And even then, it's very hard for them to say these are legitimate bills versus not, even with the whole committee. And that's at the national level with all the capacity that Treasury has. So how much less? So I think also the reporting of the story has been oversimplified. Okay. And I think that's why Kenyans are finding it a bit unusual. But if you look at the DCI charges, it's conspiracy to defraud, but it's presenting false documents and dealing with false documents. And Kenya, it's very easy to get fake documents to be able to discharge some of these things. I think once you look at it from that perspective, you appreciate the complexity.
Why are you saying no?
If we are able to investigate now and find it, right? What's a regulator's job? To make sure that you're playing everything by the rules and by the book.
Right.
And at the very least, you could say that something has happened. Kawanov could sleep. But over and over and over again until billions are lost? Come on.
I mean, I'm not excusing the action. I'm just saying that I think sometimes it's very possible, especially if you look at even in the banking sector, some of the banks that went down in the last decade or so, the tracing was very complex. It was not just very in your face type of fraud. And all I'm saying is without, again, going back to the issue of SASRA is dealing with about 5,000 entities, so I think for me, a big part should be, are we boosting the capacity? Yes, you're right, Eric, when you say sometimes capacity can be overused, can be abused, but it's true, if you really look at the numbers, even if you have one official at SASRA looking at one SACCO,
you'd need 4,000.
You'd need 4,000. I mean, that's enough to fill this whole building.
Right.
On a very modest
scale.
I
get what you mean. The capacity issue, we could argue about it, but I think from a regulatory perspective, then the question is, what more can we do? Fine, SASRA, first of all, I always like to go back to the money. Where does SASRA get its funding from? That's a great place to start so that we can see, where they're coming from, who pays the piper, how much they have to do this regulatory work. So who does fund SASRA?
Well, it's a state agency. It's regulated just like CBK.
Right.
It's part of the Treasury, Ministry of National Treasury. So it does have its allocation. If you want to get the exact amount, you'd have to go to the quarterly budget review
Right.
to see exactly how much. And that's a good question, to see how much it's getting vis-a-vis
The work it's expected
the work
to do.
that's a very now that's a type of question I think now policymakers need to be asking.
Right, because like 4,000 SACCOs is a lot. A lot of, I don't know the amount in total, like share deposit from members across, but it's in the billions, obviously. Something that could weaken an economy. But more so, if I am joining a SACCO, for example, and I'm not going to be the one to make the decision to join Cusco, but I will make the decision to join a SACCO. What are some of those green flags that I can look out for that can give me confidence that this SACCO is heading in the right direction? And potentially, should even something like this happen, the fractional revenue will be okay. Small things just to keep me, feeling safe.
No, that's a good question, Mariam. And even before I answer that, I'd like to make a policy proposal. Early on, I'd said about 50 of the top SACCOs contribute to about 75% of the industry performance. So one easy way of fixing this capacity issue is saying these top 50, can we have a special club for them? The KRA has large taxpayers, medium taxpayers, small. So only 50, this 50, if you get this 50 right, chances of getting an industry crisis is minimal. And we'll make it more rigorous, almost maybe like CBK level of rigor, but also they'll enjoy more benefits because where there's privilege, there has to be responsibility.
I like that. Okay.
So that also helps to your second question of how should I choose? So if that person was asking that question, they'll be able to say, okay, I'm with a tier 1 SACCO, I'm with a tier 2 SACCO, I'm with a tier 3. And even the banking sector have tier 1 banks, tier 2 banks, tier 3 banks. So if I'm choosing to work with the tier 3 SACCOs, I should be ready for maybe looser standards. But if I'm in a tier 1, I should be able to say the standards are they keep saying a shilling in a SACCO should be as safe as a shilling in a bank. It should be at that level. So now people have the choice. They say, you know what, I'll be in a tier 3 SACCO for my own personal reasons. And it's a risk I'm willing to take. And I think that information will sort out even the capacity issues you're talking about.
Right. If I walk into the SACCO and I'm just shopping around, maybe it's the SACCO from where I work, it's the Nation SACCO, maybe it's a SACCO I got from my mom. What are those things that I should look out for? And I'm just like, yeah, that's a good idea. Or red flags as well, things that I see, whether I attend an AGM or, a meeting or I'm handed papers and I'm like, maybe not be a good idea.
The best answer to that is what you've exactly said, looking at some of their filings in terms of the previous AGM, what was the level of disclosures that were coming out? Do you have confidence? But you're right in saying, your young Gen Z walking in might not have the time to go download
the papers and
the paperwork, and they may not even understand.
Even attending that AGM, it's a tall order.
And I think this is why they should create these tiers of tier 1, tier 2. Even at the bank, they have a sticker. They say we are a tier 1 SACCO. That's it's a green flag.
Okay.
In fact, have the post in green. You're a tier 1 SACCO. So when somebody asks, what does a tier 1 SACCO mean? They say we are held to higher standards, blah, blah, blah. Or we are at tier 2, come up with a color 40. So it's even to somebody who's uneducated, somebody who doesn't know much about reading annual general meeting reports, but they see a red tier 3 poster. They're like, okay.
Because I think even at tier 3, I still deserve good governance and I deserve, good practice.
You do, but you also have to appreciate the reason that those tier 3 are tier 3 is sometimes they cannot not afford some of the costs. I mean, just to get a governance consultant on your board, and how much do you need to pay a top-notch governance consultant here in Nairobi? I mean, it's quite significant. So even them, they understand they might not have the best investment mind, the best governance consultant, but they still have a purpose. And you can identify with that purpose. So I think for me, it's giving people all the information they need to work with. But of course, I agree with you. There should be some base minimums.
Yes.
There should be, and they do have. They keep saying they have liquidity ratios that you need to maintain 15% liquidity ratio. So even the smallest of the smallest still have some basics in terms of liquidity ratios, but the quality of governance management definitely improves with the budget that you have to work with.
Definitely, because you want to grow.
Yes.
But then the bottom line should be that you all
should not lose money.
Yeah, and you're all bound by the same regulations.
Yes.
The same set of regulations cut across, whether you're tier 1 or tier 3, the regulations are the same. That, you're taking money, and therefore this is what you shall do with that money, that you shall not do, you shall not lose people's money. Bottom line. I want to conclude with, on the website of Sasra, they have a quote by their CEO, Peter Njogona, and it's about the SACCO and member relationship.
Okay.
It says, a SACCO member, in a practical sense, finds himself in a dilemma, being the owner, depositor, and the borrower. This complexity is best manifested when a SACCO is in financial distress. What do you think he meant by that, Ken?
Please repeat that.
A SACCO member, in a practical sense, finds himself in a dilemma, being the owner, depositor, and borrower. This complexity is best manifested when a SACCO is in financial distress.
Well, it's true. For me, I think it's true. And I think it's a reflection on the trajectory that SACCOs need to take. As you said, some start with very humble beginnings.
Yeah.
But if we can create a path of growth, eventually to become fully fledged commercial banks, I think you incentivize even the staff to be able to upgrade, because you say, if you guys meet ABCD, we might be able to get a license to become a bank. So there's that incentive. And for me, I think if CBK can be open to those type of conversations where new members are coming in from the SACCO community that have been centers of excellence, it propagates even downwards.
Indeed. Ken Gishinga, economist, thank you very much for joining us. Our next conversation is on matters of budget and public finance management. Our guest is the president of the Kenya National Chamber of Commerce and Industry, Dr. Eric Ruto. We'll be talking about the business barometer. The Kenya National Chamber of Commerce and Industry usually releases a business barometer looking at what's the business environment in the country in a quarter, in a half, in a year. And we will look at that and then base that on what then the industry would like to see in the next financial year in terms of budget, in terms of government expenditure, and in terms of even revenue-raising measures. Eric Ruto, our guest, coming up next. It's 8 a.m. Keep it here. EACC wako busy.
Wako very busy.
Wako very busy. Wako very busy. Wakae busy hivyo, sisi tukifanya online trading. Starting now. Because here we are with Robin. Robin, karibu sana.
Asante.
It's good to have you.
Thank you.
You're the people who are making money just by sitting somewhere. Or at least you know people.
Well, yes.
At least you know people who that's all they're doing. They sit, they say we're making money, and they're actually making money. Robin is a finance professional with at least 8 years of experience in global markets, financial analysis, and brokerage, specializing in online trading, modeling, and B2B. And he has worked in this space for years. And that's why we said, come, because you understand the law, and you understand the practice, and then you also understand the peculiar habits of Kenyans.
Yes.
Being a Kenyan yourself.
Yes.
There's something that we want to do though, a small one. This girl, she's called Good Girl Jano.
Okay.
And Good Girl Jano is also called Jano wa Makoti.
Oh, yes.
Yes, you know that?
Yes.
Ushasikia hiyo Jano wa Makoti.
Chinua Chebe wapi?
Education on quotes.
Yes. Now today, she's got an interesting quote. This one you don't even need to give us hints.
No hints. We've not even unpacked it. But we unpacked a lot in the last hour. Tulifungua roho. In fact, we need to decompress. But there comes a time when the nation is more important than an individual. Who said that?
Kenyan?
Yes, Kenyan.
Wow. Wild guess. Asno Kibaki. Could be Saitoti.
Yeah.
Boom.
There come a time. There come a time when the nation is more important than the individual. That's how he said it.
He mumbled a bit there. The video is there. I wish I'd asked Wangeshi to have that video. We could play out with it. But yes, that's
this was
exactly
at Kasarani.
Yes.
And this was the moment when he was actually losing his position as the national vice chairman of the ruling party then, KANU. at the point of the merger between KANU and LDP. Raila Odinga and his people are coming in, and Moi is therefore now democratizing this giant party called KANU. And instead of having one position of vice chair, we're going to have 4 positions of vice chair. And we'll have Raila as the man coming in as the Secretary General of the party, and one of LDP people to be one of the vice chairpersons of KANU, and Kina Kalonzo and Kina, what was his name, Katanangala, and the others became. So I thought it was like, you know what, fanyeni hivi, chama ni sawa, mimi sitapigania
but wacha na hii
sitapigania mpenzi yanitaki.
Great history there.
Yeah.
What do you think? Do you think those words make sense to you today?
Actually, every day. Because as a Kenyan, it's like a battle every day, to be yourself, and also to be there for other people. And what we do in my space is more about empowering other Kenyans. Are we able to elevate, Kenyans? It's not just about me, there's a wider, audience to this. So I think I'll need to write it and, keep affirming myself with that as well.
Right.
Yeah.
Every day you look in the mirror.
Today is the day.
Right.
When the nation is more important than me.
Yeah.
Ask not.
What the nation can do for you.
Yeah.
What you can do for your nation. Hey, Robin. I have an ask, Robin.
All right.
Ningependa kuomoka. By next month, I would like to be driving a Mercedes GLE.
Okay.
I'm at 0 right now, so we're starting from 0.
Okay.
Ningependa kupop champagne na kuosha watu mkono na nayo in the club as I enjoy myself. And I've heard that online trading is the way to go. Teach me.
Oh no. So online trading would not be the place. We could.
Killed it on arrival. Dead on arrival.
The fact that you're so serious, you're like, listen, I have goals.
Yeah, we need to find out, what things like, a hat would do, in the market or something like that, organs, but not online trading.
Oh, wow.
Wow.
He said, go
selling a bit
sell
of...
your organs.
Yeah.
Okay, not online trading.
Don't try this at home.
Don't try this at home.
Okay,
Really?
I have to go back and retreat.
But really? Valid. What Mariam has asked, what Eric is just asking.
Really? That's not the impression we are getting from the people we're seeing bragging on social media.
But how many people are bragging about Forex on social media? They are not as many.
There's many.
Uh-huh.
And many still in communities, right? They may not
When
bring
you
it to
look-
social media, but...
When you look at the market, or the entire actually audience who do online trading, we're in hundreds of thousands, all right? And the characters maybe on social media just 10, 20, And I think they deserve what they do, because when you get to online trading, you also realize that it's one place where, you see immediate results. So unlike many of other things, I won't go to government, but, immediate results in the fact that it could be stressful, couple of hours, and you're out, and then you make merry.
Right.
Most of them are young, but this is a practice that have been done by even the older generation. I have quite a number of clients who are actually above, 40, 50 years who are very good at this. So it's a lifestyle thing.
What is it?
So online
What
trading.
is this thing? Mnauza nini?
Online trading is also, as a part of fixing the nation, you also need to fix what online trading is. Because we've always thought, or has always come out as online trading is just Forex trading. While Forex is just a component of online trading, we have many other financial instruments that you can be able to, interact with on the online trading space. And you use platforms to access these markets. And these platforms are given by licensed institutions who we call brokerage firms. So they're licensed with a license called Online Forex Trading Brokerage. Other terms that come is something like non-dealing. You're given a license for online non-dealing. All right, that means that you're simply giving a platform to your clients, and you're not trading on their behalf.
Okay.
So when you go to the platform, is that you face hundreds of assets. Say, Forex is one of them with, say, over 60 currency pairs. But you go to other asset classes that we call commodities. So commodities are the soft commodities like coffee, cocoa, soybean, and all that. You find metals. Kenyans are good lovers of gold, silver, platinum, palladium. You find shares, You find other very interesting instruments like futures, like ETFs. All these are financial markets that are available in the online trading space. So what matters is what is your interest. Now, Forex is what is always talked about because, people have an idea of it because you've all maybe done some foreign exchange at some point, either when you're traveling, or, when you're shipping in things or, when you're shipping out stuff, we've all had that conversation. So it becomes more relatable, I would say for you, probably, you'll understand, you might lean more on investments or into markets that you understand more. Forex might not be it. Probably could be a stock in maybe one of the cable channels, such platforms where you've interest, you understand. Oil is a commodity that is greatly traded around the world,
Yeah. Is Forex... So you've talked about online trading, so I'm trying to be careful not to specify. Maybe for this case, it's Forex. There's a sense that it's shrouded in secrecy, because I think what we're trying to do on this platform is just demystify. It's not to point fingers or to say it's a scam or scheme. It's to just try and interrogate. But there is a sense people say it's shrouded in a bit of secrecy. It's almost like an exclusive club. Would you agree with that?
Yes.
And why?
That's the inception of it. So mostly this was built for, big financial entities. These were banks, corporate institutions. And for them, they used FX, not just for speculative purposes, but as well for settlement purposes. And back in the day when, before the retail market got into this, you needed at least $100,000 to transact. And that's, cash exchange. And in this point, either it's for speculative purposes or it's for settlement purposes, for example. So this was a game for banks and, I'd say super high net worth individuals. But now came in, brokerage firms who are now able to open this up to individuals like you and me, whereby all of a sudden you don't need the $100,000. You can actually say start with $1,000 or even less, and you get the same exposure. I would say for us, it still seems hidden because of information. Like, yes, Kenyans were very quick in getting information, but I would say this has greatly been impactful in the last, say, 6 years. Once we started the regulations and, there's many conversations have happened across the time. So slowly, we're moving away from the secrecy of it and opening it up to everyone. Trading is not for everyone as well. So those who have the edge and the ability, to, understand markets, analyze and do that, they have an opportunity now to go and invest and trade.
If I don't have the edge, but I have the interest, rabbit hole, or I'm learning and relearning and I'm excited, but do I know where the danger lies? How can I pick up on the uncharted waters that I shouldn't be in?
That's a very nice question. So we're lucky that Capital Markets Authority, or CMA, adopted this also from a point where there are a lot of frustrations from clients who have the information, who have the know-how, who can be able to actually, send money offshore to unregulated companies, and they would always deal with cases of people going to them to report, there's this and this company that did this and that, but it's not in our jurisdiction.
They're not in Kenya.
They're not in Kenya.
Right.
So it starts from regulation, understanding who are you dealing with. Because, once you're licensed, you're mandated to offer asset classes that are actually within the regulation. Say, for example, there's a very big, there have so many products out there or assets out there that are not regulated in Kenya. And they're not regulated for a main reason that we cannot determine, what is the underlying asset for this, for example. So where the government understands, where CMA understands, they can actually back this because it's regulated elsewhere. Now they can adopt it. And that is why maybe even the conversation around crypto is still, there in their heads, and they're still speaking about it because, it's something that is there and it will continue to be there. But how do they support Kenyans in making sure that they work in a very regulated
in the safe
space?
area? I want to step back.
Yeah.
A couple of things that you've said so far. So number one, online trading is broad. It's
Yes.
not just Forex.
Yes.
It is in what now you called assets. It's trading online using tech
Yeah.
on various assets.
Yes.
You could be trading in shares, just like we know shares at the Nairobi Securities Exchange, but online.
Yes.
That is still online trading. You could be trading in Forex, various foreign currencies.
Yes.
That is online. Or you could be looking at like precious metals, like you said, kina gold, silver, nini.
Yeah.
Or commodities like oil and big things like beans and rice. Yeah? And what's it that we get from Ukraine?
Wheat.
There you go.
Yeah.
Or futures. Now, futures is where you are speculating about the future price of something now and you fix it.
Yes. Yes. So
Okay.
yeah.
So all those things are assets. And so the online trading is all those.
All those.
And the Capital Markets Authority in Kenya is regulating some of these.
Yes.
Which ones?
Actually, all that I've mentioned.
All these ones that we've mentioned
Yes.
are under Capital Markets Authority's regulation.
Yes.
And then you talked about licenses. So now let's talk about licenses. Because you've mentioned, I think, different kinds of licenses, non-dealing license,
Yes.
online forex trading, brokerage license.
Yeah.
So under CMA, who does CMA license to do what?
All right. So on the online space, there are two licenses that are there. One, we have what we call now the online non-dealing brokerage license, right? And then we have the online money managers license. So the non-dealing is purely for brokerage purposes, and that is where now companies like Scope sit in. And on the money manager side, now these are people who have been licensed, and these are separate license from what you traditionally see as fund manager license. So this for online license actually is what is mandated for people in the online space.
Only. Okay.
So, and the mechanisms for them are very different from the mechanisms for fund managers. Because you see, for fund managers, maybe they would adopt something like, a CIS, something like that. But on the money manager side, this is actually very individualized because the operation under that is where an individual client has to go and open a trading account and then mandate the money manager to execute on their behalf. All right.
Wait, sasa tukuja hapa kwa Mariam. Use Mariam as an example because this girl's got to drive a Mac.
Right?
In
a week's time.
By next month.
Right?
Okay, sasa me push timeline. but
Yeah.
okay.
So akona do hapa hivi kidogo na ngapi? Okay, usituambie.
Yeah.
So she has some cash
Yeah.
and she wants to get into this.
Yes.
Who does she approach? Does she approach the one with an online non-dealing license?
Okay.
Or does she go to the online money manager's license? Or does she have to deal with both?
Good question, because the approach is dependent on, one, your knowledge. See, when you can be able to go and you want to do it yourself, you can go and open an account with a brokerage firm directly.
Okay.
All right? And while at it, you can still have an additional account and approach a money manager for that specific account. So you see, in that way, you've done both. There are those who have no idea, but they want to get into this. So they will go and look for a licensed money manager firm, all right, and open an account with them, and they'll be guided on how they get papered into to start their trading journey. So those are two scenarios that are available under the law. Yes. Yeah.
The regulation bit is okay. I think we're good on the who is regulated.
Yes.
Yeah, I think the part for who is in my corner, who should I be looking for, still
Yes.
needs a little bit more explanation.
All right.
So that we know, because let's start let's walk the journey together. I have that, let's say I've put aside 250 for investments or whatever. I would like to triple, quadruple. I know it's wishful thinking, but let's go with that. I'm thinking, okay, I want to go into online trading of some sort. Where do I begin?
All right. So it begins by the first question. Do you want to do this yourself?
Great question.
So
do I have the capacity?
Do you have the knowledge?
So first you need the knowledge. You need to know what this thing is.
Yes. Because that is what will guide you.
Do you need to know what dollars are, or do you need to know how to sell dollars? I mean, what when you say knowledge, can I say knowledge?
Knowledge is
I know oil.
Fair point. You need the knowledge of trading. You need to know how do you pick an asset? How do you analyze the asset? All right. But when you find yourself you're falling short of this knowledge, then there is a purview for you to go to a licensed money manager. All right.
Yes.
But when you tell yourself, I want to learn this. I want to start. I want to do this by myself because I want to, in a week's, in a month's time. So you decide, all right, I'll be patient with myself. I'll learn the basics so that you still go ahead and open an account, and get yourself through yourself, in the market. Start small. You understand. You learn. The good thing is everything is tech, and there's so much information that learning is available for you across various other platforms, including YouTube. All right. So when you're there, you decide now. I've seen all these, but my interest now lies more in gold. All right, and you'll be like, all right, maybe you want to do gold because maybe your grandfather left you a few.
So
you relate
you're
with
from a
gold.
Koloman.
Yes,
You have a mine.
Yeah.
Your backyard.
So that's something relatable to you and something of interest.
Right.
Now you go and understand the market patterns. What's the best time to trade this? How do you trade it? What is the risk exposure for me? How do I de-risk myself? What are the things I need to look at in terms of, trends and all that? Because you need to understand that all these markets, the reason why there's this big fascination around online is because of the opportunity that is there. When we are asleep, markets are still moving.
Right.
When our local stock exchange closes, other markets are still moving. The market movement for, I would say, global market movement is, I would say, 5 times, 10 times, or even times, 100 times what we're doing locally here.
What?
So when it comes to the market volume in terms of money that is moving around in a day, we're talking of upwards of, say, 5 trillion in a day. So that is why people are going, and that is why people are very keen to get themselves exposed to this.
Sorry to interrupt you.
Yes.
It's also how people get caught, because I hear numbers like that and I'm like, what do you mean? What do you mean? That's how. Yes, that's what just if I got 0.0001% of that, hapo ndio.
Because I think
No,
him
mocha.
talking about the opportunity, I'm also curious to know what is the missed opportunity? What's the misfortune side? What does it look like when you fail at it, and when should you decide to pull back? I think we're going into a break.
Right. But when we come back, we definitely have to look at that side, right?
Yes.
So that we understand, the opportunities and the risks thereof. And to your point, I think the reason why so many people are getting caught up is because everybody starts a YouTube channel and they're like, I'm going to teach you trading. I'm going to teach you this. I'm going to, on what authority? You know, alafu hivyo ndio mnaingia kwa scheme hapo. We'll be right back after this break. If you have any questions, hashtag is Fixing the Nation. Of course, we're on NFM, on Nation TV, of course, YouTube, TikTok, Instagram, Facebook, everywhere. Ask any questions you have for Robin. We'll be right back. We're getting back into our conversation with Robin Hood.
Many comments.
Right?
Tibbs Muge is saying trading is all about people. He quotes that. He says, can you ask the guest this, whether this is true? How deep is the dark pool?
And the very last question he asks there, the risk of online trading to an individual is that online trading is inherently gambling.
Accept the first before moving forward.
Asking that because that's...
It's inherently gambling.
Yeah.
It's not.
That's according to Tibbs Muge.
Thomas Osoro says, ask our guest why most people entering into this venture end up disappointed, and most of them commit suicide after losing a lot of money.
Okay. So maybe to start with the first one.
Okay. This is all about people.
No, there's more to it, because markets are moved by a lot of things. Demand and supply, for a fact, yes, is because of people. But economics or economies grow definitely because of the work of the people. But market patterns are also, or markets are also, affected by other things, including natural calamities that are not, about people, but they affect the people. About gambling, no, it's not gambling, simply because this is a financial asset. And when you're speculating, remember it's a game of probability. All right? So when you toss a coin, there are two options. It's 50-50, right? Could either be heads or tail. So when you're getting into the market, it's the same, because when you say, for example, go and buy an asset, the first risk is, of course, you could lose because of the price movement of that asset. However,
but Robin, gambling is also a game of probability.
But who
Just roll
controls
the dice, man.
Yeah, but
It could be 1 or 6.
yeah, but who determines
The probability.
Yes. You see, that could have somebody determining the probability, unlike the market that is not an individual determining the outcome. And that is where, learning again comes in, because what you're doing is you're positioning yourself at the right place, or with the right asset at the right time. And you're now giving yourself time as well to, experience the full return of what it is that you're looking for. And also you're telling yourself, if it doesn't go my way, this is how far I would want to go. And I remember your question around, I think it was about something around risk, what you can lose and all that. One of the beautiful things in the platforms that we have in the modern world is their risk tools, or their risk calculators that help you determine, if this was not to go my way,
right,
how far or how much do I want to lose? Remember, the first disclaimer usually on trading is, do not invest, not even in trading, even investing, do not invest what you cannot afford to lose.
Yeah.
So by the time you're losing, it's not something that is going to offset your lifestyle. It's not something that is going to take you back to Moshava,
Invest in your disposable cash.
Yes.
Let's say.
Yes.
When I see people trading, not online, but in the securities exchange, those brokers will talk about very many things. When they're advising you buy this share, they'll come with what they call the fundamentals.
Yes.
The fundamentals around this company are, right? It's a power generating company, it's a power distribution company, it's a mobile network operator, it's a sugar company. These are the fundamentals of that company. Over the last X number of years, how has the market looked like? How have the rain patterns looked like? How has all those things that they say, based on this, then we can see a likelihood that this company is going to turn a profit. There's a new board, there's a new management. Based on these things, there's a likelihood that this company is likely to turn a profit, so you can invest here. And we are taking a chance, but it's a calculated chance.
Yes.
Now, when you're doing this online trading, do you have those fundamentals at your disposal?
Yes, you do. And actually, yes, you do. And the beautiful thing is, there's so much data that actually you go back historically and look at, and also look at cycles that have happened for that specific asset. So, for example, you want to invest in wheat.
Yes.
Right? And or you've been investing in wheat, so you understand the patterns. You understand. You'll be very keen in watching the weather. So all these people are wondering, nobody cares about the weather apart from this guy. And it doesn't care about the local weather. He's looking at how the winds are flowing in Europe and all that. It's simply because for him, it's simply for him, he knows that, he's investing probably in even futures in that space. And is able to go back and tell, these were the cycles last year. You know, these are the patterns. These are the current patterns. So I think that the productivity this year is going to be less.
Right.
So at this time, I want to be out. I want to have liquidated my possessions or my asset at this time. So the same fundamental analysis apply actually on all the instruments, and more beyond fundamentals, because you know, they keep changing. The other things we call price action or price patterns, and these ones are now demonstrated on the charts on the platforms. All right, and this is where you're able to go back and understand that price as levels. And traders you always hear traders talking about, you know, analysis, you know, like 3 key determinants of making a decision if you want to buy or sell an asset. So you need to do the fundamental analysis, you need to do the technical analysis, and something that we call sentiment analysis. So the technical analysis speak about price. You know, it shows you price patterns. It shows you this was the highest level. Did you know that as we speak today, gold is at its highest level?
Gold
is at its highest price, lifetime price. Ever. Today as we speak, I think it's at 2,950
per what?
Per ounce.
Wow.
All right?
Ounce
That's the highest it has been.
By Atujrangi, that other system.
Hii mambo ya kipimo ya miles, kilometer.
Ounce najaribu kufikiria na kg. Wacha
Have you
niangalie.
talked about how you can assess the risk?
Oh yes. So now, yes. Now this is where now the risk comes in, because once you understand, you've looked at your price action, you've looked at your fundamentals, you've checked what now Erica said, like, say what has Trump said about this in his last couple of speech, or tariff wars and all those kind of things. And at that point, you go back also to the third level of analysis and sentiment, and you look at what's the market sentiment for this. And now at that point, you decide, okay, this is because maybe there is a mismatch between maybe my fundamentals position and my technical positions. I'll start small and I'll take a risk market movement, say 10 points or 30 points, and I want to be out if it retraces more than 30 points. Now, that is a mitigation that you've put on your investment, because you already have a number and you have a figure in mind, because this 30 points movement could be, say, $300, could be $100, or could be $5, depending with how much volume you're buying as well. And again, now you go to the upside and say, if it goes my way, I want to get out of the market at this number of points or at this specific price, or once I achieve this specific price. So now the rest is a journey. The rest is now psychology, because the market doesn't move in a straight line. So it could go down a bit, and you decide, hey, no, it's going to get to my level.
Right.
And then it bounces back. So this is where psychology comes in.
So here the risk is in how you apply your knowledge.
Yes.
And that becomes like a skill.
Yes.
How then you apply that trade with the skills that you have.
Yes.
How about the other risk from somebody who walks around the villages telling people that I am in online trading, bring money, I'm going to help you grow your money, grow your wealth? How does one tell who is legit, who is not? Because
I think the village here is Instagram.
Everywhere. By the time I get all these, skill, I'll be getting the skill, yes. But I also want to participate in trading. Maybe I want to come to a guy called Robert comes and tells me, no, check him, me, I've been doing this thing for a while. Hey, Gary, last year. I've helped guys, so and so. I'm the one who's been sorting him out. How do I know that this is a legit approach? This is a regulated one, and this is not. And how do I use the Capital Markets Authority
to help you make your decision?
Yes.
That's a good question. So first off is, anything flashy, keep off.
Anything flashy?
Anything flashy, keep off. Simply because, what people say about old money, and
Pesa haipigi kelele.
Bas.
Pesa haitaki kelele. There's a Luo saying for it, I forgot.
There's a difference between coins and notes.
Oh. Chingli, 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 chingli.
Yes. So, but back to the question is, anybody who's promising you any ridiculous return, or do 10% for you in a week, or do this, that is a lie. When you come to online trading, Forex is the only, asset class that is actually declared in terms of performance on a daily basis, where everything else is declared on an annual basis.
Right.
You get. So this is a daily performance. Well, yes, you could be able to do as much. You cannot guarantee the performance, or you cannot guarantee a return. So anybody guaranteeing, first, it's a red flag. So the next thing is, where are they channeling you to? Are they channeling you to open your own individual account where you have control of your money, where you can be able to access your money at any given time, day or night? Or are they telling you, send me this to my M-Pesa, we will work it out, run away.
Run away from that.
Okay.
Is this somebody actually taking you to a regulated entity to open up an account? Or is he telling you, forget about Kenyan brokers, let's go offshore, there we can send with, all manner of, already you're in deep waters. But when they're able now to channel any conversation that they want, because I'm assuming this is somebody who has come to help you, amekuja kukutoa block. You see, you also need to listen. Usikie unatolewaje block. But if the block is not following the CMA route in terms of telling you, okay, let's work with local broker, I've interacted with this and this, these ones are fair in pricing, these ones are, if he's not channeling you to a regulated local entity, he's already pushing you out of there,
Is there an example of a get-rich-quick online trading scheme that was exposed, and what lessons we can learn from it?
Yeah, I go back to the Limuru. I'm sure, Eric, you must know this. There was a Limuru, $1 billion or $2 billion scam back in... Where? Connie, you were there?
Eric has been on Gen Z. That's why he's just like, you must know this.
When I was Gen Z.
What was happening in Limuru?
I know what was happening.
Actually, what happened? Limuru billion scam.
Yeah, let it be his word.
Okay,
Yeah.
okay.
Let me.
So tuangalie Limuru.
Kulienda, how investors were conned 1 billion shillings by Kiambu couple. It was on the Business Daily on the 23rd of December 2020. A Kiambu couple defrauded thousands of investors by promising to double their cash deposits, only to later disappear and close shop after collecting more than 1 billion shillings. Right. The couple is named here. The owners of online forex trading firm allegedly told clients that they would use their capital to trade stocks in internationally listed companies, but fell back on the promise soon as the money had been deposited into their account. 122 investors had lodged a class action suit against the forex trader seeking compensation for their money, which they claim has not matured 1 year after deposit, despite a guarantee that they would receive dividends on their cash within a month. They claim to have paid a total of 77 million shillings to VIP portal, but police records say the suspected fraudsters at one time had more than 1 billion deposits in their account.
So that is one of the incidents.
And it was, they were promising to invest offshore.
What happened?
When you look at the time of when that happened, this is part of what really drove CMA to, create regulations, because, they would be able to guide Kenyans correctly. At that point, you could imagine anybody who came and told you that they can do, even if it's what percentage in a year, when everybody back then knew that the only way to invest is put a bank deposit, fixed deposit, or something like that.
Right.
If you told them anything bigger and better than that, they'll be ready. You understand?
Yeah. And
they didn't care at that time, because again, when you look at information now, accessibility of information now, and back then it was not there. And looking at it now, it would be very hard to go and tell Kenyans or fix Kenyans into such. It still happens.
Well, it happened in.
It still happens in. Yes, it still happens, and this is why I always advocate for more resources for CMA, to make awareness around this kind of investment.
Yes.
Let it be very clear, let it be black and white, so that people understand and people know, so that we don't get this
Being pulled into
conversations all the time.
True.
The problem with trading is the more you think you get the skill, the more you think you need more capital. And then you start thinking, okay, I've pulled a few of my friends, I think we could do big.
Yeah.
And if you're not careful, it spills now from there, and it becomes bigger and bigger, untamable. And by the event that the market doesn't go your way and you suffer losses, it becomes a very painful conversation from
because
there.
it's multiplied to many. Is there a portal by the Capital Markets Authority where I can check all the licensed traders? What is that?
Actually, on the CMA,
That's on the CMA
website, yes. When you go to the list of licensees, you'll be able to see they've briefed them into different categories. There are stockbrokers, there are online brokers, there are fund managers,
like that. So you can go
investment
look
banks.
for
Yes,
something
they're listed there. Right now, we only have 10 licensed online non-dealing brokerage firms. There are only 10. Back in 2017, there's only one. Over time, we've been able to evolve, and we have 10. We have 3 licensed money managers on the portal, from the CMA portal. So those are anything outside of that, is already murky.
You're already taking a big risk. I want to
Yes.
pick up on a question from, a comment actually from Renee Jones, who said Forex is discipline. Gambling is basically trying to predict. A very small part of Forex is predicting where the price will go.
Yep.
Risk management is everything in that you have to know when to close. When do you close? I think that's a great place to know. How do you know when to close?
You gotta know.
Well,
Yep. Know when to fold.
no, we said we are not singing. They said.
We're fixing the
Okay.
the vocals.
Well, you have to make a number for yourself every time, because you know what is at stake. So, for example, if you have $10,000 that you're trading, you need to tell yourself, I do not want to lose more than, say, 1% or 10%. What does that equate to? If you have $10,000, 10% is $1,000 you get. So you have a hard stop, and you tell yourself, if it gets to $1,000, regardless, I'm out. You see, you've been left with $9,000 that you can bounce back with.
Right.
Now, the problem with human beings, it's not actually